Good morning, ladies and gentlemen. I'd like to call the hearing to order. I'd like to begin by acknowledging that we're in Treaty 1 territory and also the Dakota Nation's territory and the traditional homeland of the Métis Nation. My name is Ron Merritt. I'll be your chairperson this morning, and introducing the panel members. Mr. Brent McIntyre is present, and by way of Zoom is Cynthia Stevens. Our recording secretary is Belen Rojo, and the assessor this morning is Mr. Jonathan Spacek. This morning we'll be hearing an application for revision of the assessment roll in accordance with the Municipal Assessment Act. The matters for which revision is requested are described in each application, and we'll limit discussions to these matters. The statements that the applicant and the assessor make at this hearing are sworn in testimony, and anybody speaking in these matters must be sworn in. Please be advised that assessments of properties are not considered evidence of market value by the board. The board is appointed annually by City Council and is independent of it, along with the City Administration. It makes its decisions based on the evidence provided at the hearing and issues a written order that would be mailed to all parties as soon as possible. Please note that the board's decision in respect to the application may be appealed to the municipal board if the matter pertains to assessed value or classification, or the Court of Queen's Bench if the matter pertains to application from exemptions from taxation. Should you wish to appeal, information on how to do so will be included in the board's order. In respect to the hearing this morning, I will confer the matters to be addressed with each of the applicants. Following the swearing in, we'll then have the assessor's testimony followed by questions and the other applicant may have, and the applicant's testimony followed by questions. Each party will have the opportunity to summarize if they wish. Once all evidence about the application has been brought forward, the applicant may leave. The process will repeat for each item on the docket this morning. The session will close after all applications have been heard, and the board will deliberate in private and make its decisions. You will receive the order by registered mail. As in all information, all hearings are live stream recorded and will be part of the public record. We'll ask that the secretary swear in the assessor and swear in or affirm Mr. Reimer after.
Mr. Assessor, please state your full name.
Jonathan Spacek.
And you affirm the evidence about to present is the truth, the whole truth, and nothing but the truth?
I do.
Thank you. Mr. Applicant, please state your full name.
Ariel Farmer.
And you affirm the evidence about to present is the truth, the whole truth, and nothing but the truth?
I do.
Thank you.
All right, we have, this morning we have 4 on the docket, and the hearing will consist of these items. I think we're gonna go to the first item, which is 447 Portage Avenue. And Mr. Reimer, I understand that you are appealing for that property and also 123 Main Street and 123 Main Street Unit 130. You're appealing the liability and class. Is that correct?
That is correct, indeed. Yep. Okay. And for the benefit of the board members and Mr. Spacek, actually the main issues don't have anything to do with the quantum of assessment, but rather the very issue of liability to assessment and the liability to taxes.
So I think, Mr. Reimer, I think the floor is going to be turned over to you, and you will talk to us about the liability in regards to 447 Portage Avenue.
Sure. Okay, if I could ask the board members and Mr. Spacek to open the materials that we filed. And now, so can I ask, I'm assuming everyone's looking at the PDF file that I submitted as opposed to a hard copy?
Yes.
Yes.
Okay, so what I'm going to do, the page, when I refer to a page number, it's going to be the page number of the PDF file rather than the numbered pages at the bottom of them, just to be consistent so that everyone's got a clear understanding of what I'm referring to. So starting on page 2 then, this is a business assessment for FNP Parking Limited. Now FNP is a subsidiary of NPDC, and that is critical in this case and in a couple of the cases that follow. And I will explain all that shortly. This is the parkade located at 447 Portage Avenue. The business assessment, as it stands right now, is $306,360. And what we are requesting in this case and the other 2 cases on the docket this morning, held within for the business assessments of that corporate family, is that the assessment be reduced to 0. So just to set the context for these matters, as we've got at the bottom of page 2, the governance and management segment from the NPDC being North Portage Development Corporation. From their profile line, it confirms that Development Corporation, and that designation to this. Sorry, I'm going to stop my video. Am I freezing up at all as I'm speaking now, or is it fairly clear?
Yeah. Yes, you are.
Okay, so I'll do that. So North Portage Development Corporation, as I mentioned, was incorporated in 1980. Corporation is a wholly owned subsidiary of NPDC, as is, of course, the FNP Parking Limited. So NPDC has 3 shares, and each of the 3 shares is held by a different level of government. The federal government owns 1 share, the provincial government owns 1 share, and the city of Winnipeg, NPDC. So moving on then to
Carrie?
To page 3 briefly, and I won't go into detail individually as I go through the materials, but what I do on page...
Mr. Reimer, you're breaking up quite a bit. So,
perhaps what I'll do is I will exit and see if I can reconnect to a connection that's a bit more stable.
All right.
Thanks.
Okay, we will go into recess while we deal with our issues.
Okay, Mr. Reimer, the floor is yours, and you're talking about liability for 447 Portage Avenue. You may proceed.
All right. Thank you. So, as I mentioned, so perhaps I'll start at the beginning. I wasn't sure how much members and Mr. Spacek had heard from my comments earlier. This is a business assessment in the name of FNP Parking, and FNP Parking is a subsidiary of North Portage Development Corporation. I'll call them NPDC throughout this hearing. The parkade is located at 447 Portage Avenue, and the annual rental value for this business assessment is $306,360, and we're requesting that this ARV be reduced to 0 by virtue of FNP Parking's and NPDC's status. So at the bottom of page 2 now, there's a segment that was taken out of the North Portage Development Corporation and Forks Renewal Corporation's profile on the web. And the NPDC was incorporated in 1983 as a Community Development Corporation, and that status is crucial to this analysis. Forks Renewal Corporation is a wholly owned subsidiary of NPDC, as is FNP Parking Ltd, of course. And the NPDC is equally owned. There's 3 shares that have been issued by NPDC. The shares are owned equally by the 3 levels of government: 1 share by the federal government, 1 share by the province of Manitoba, and 1 share is owned by the city of Winnipeg. Going on to page 3 of the materials that I've listed, and I won't go through the specific sections right now. I'll get into those as I go to the submission, but I've summarized the applicable legislation in pages 3 and 4, And the sections, with the highlighted segments of the sections are the indicators of legislative intent that I'm suggesting that would lead one to the conclusion that NPDC and its subsidiaries, including FNP Parking Ltd, should not be liable for business assessment or business taxes. So I guess, as I say, I'll go through those sections in detail as we go through. So moving on then to page 5. And just a quick check before I move on is, am I being heard, or is everything working okay at the board's end?
We can hear you okay. So you're okay.
Okay, perfect. So the subject is 440, the Parkade, located at 447 Portage Avenue. Parkade is occupied by FNP Parking Limited, which is a wholly owned subsidiary of NPDC. The corporate structure is of some import here, so I wanted to go through that with the board members this morning. What we're attaching in support of our request is a number of documents. The Articles of Incorporation of North Portage Development Corporation, which we'll take a brief look at later on. Corporate status for NPDC, confirming who the shareholders, directors, and officers are for that corporation. The Articles of Incorporation and of FNP Parking, who's the party whose name the business has been assessed. Corporate status for FNP Parking, also showing shareholders, directors, and officers. The profile for NPDC and its affiliates, which confirms the objectives, corporate structure, and core business and activities of the corporate family. The consolidated statements of NPDC for 2017 and the consolidated income statements for NPDC from 2010 to 2017, which includes, of course, the operations of NPDC, but also all of its subsidiaries combined into one statement. So then moving on to page 6, a review of the documents that are attached to the materials confirms corporate structure and status of NPDC and its subsidiaries, which I've gone into some detail on page 6. NPDC, as I mentioned, is the parent company and was incorporated as a community development corporation on December 13th, 1983. That designation as a community development corporation, as I've mentioned, is crucial to this analysis. The shareholders of the corporation are equally owned by the city, the province, and the federal government. FNP Parking then is a wholly owned subsidiary of NPDC with 100% of the shares held by NPDC. There's 100 common shares and they're all owned exclusively by North Portage Development Corporation. The directors and officers of FNP are identical to those of NPDC, which certainly makes sense considering that they are a subsidiary of NPDC. And as indicated in note 3 of the financial statements, NPDC has the right to any revenue in excess of expenses that is generated by FNP, and as a sole shareholder, it actually has the exclusive rights to that revenue as a subsidiary. The operations of NPDC and the Forks Renewal Corporation were merged in 1994 to form the Forks North Portage Partnership, and the mission of that partnership is to act as a catalyst, encouraging activities for people in the downtown area through public and private partnerships, revitalization strategies, and this phrasing is important, to work to ensure financial self-sufficiency. So the partnership certainly is the objectives are to promote the social and economic objectives within the defined areas in which they operate. Their objective, of course, is to do so and to be self-sufficient in that process. And that self-sufficiency, while it's obviously important for the corporation, also provides a clue as to why the status of the corporation and its subsidiaries should be such that it's not liable to business tax or business assessment. Now, in the analysis, I've been talking about the fact that NPDC, the status of NPDC as a community development corporation is extremely important in this case. As a community development corporation, NPDC is subject to Part 21 of the Corporations Act. What the website, again, how they describe the corporate profile, and the first sentence actually says it, in that North Portage Development Corporation was incorporated on December 1383 under the laws of Manitoba as a community development corporation and commenced operations on that date. And the objective of the corporation is to provide a mechanism for implementing the redevelopment of the North Portage area through a combination of investments by the corporation, private sector, institution, and government. And as we've mentioned, the corporation is owned equally by the federal government, provincial government, and city. Forks Renewal on page 7 now, the Forks Renewal Corporation is a wholly owned subsidiary of NPDC. FRC was incorporated on July 24, 1987, and commenced operations July 29, 1987. The objective of that corporation is to provide a mechanism for implementing the redevelopment of the former CN East Yards area through a combination of investments by the corporation, private sector, institutions, and government. And as I mentioned, the operations of the two corporations were merged to form the Forks North Bridge Partnership. As a community, and this is why I've been suggesting that the status of the Community Development Corporation is key. As such a corporation, NPDC is prohibited from making any distribution of profit or capital or assets absent an order of the Lieutenant Governor and Council. Sections of the Corporations Act that apply to NPDC and by operation of this corporate structure to its affiliates are shown then on pages 7 and 8. So starting on page 7, I've highlighted one section under 262 sub 3, which states that the articles shall be in the form the director requires, and in addition shall state that the business of the corporation is restricted to fostering the social and economic development of the municipality or other local area in the province, and must under sub B must describe the area in which in respect of which the corporation is incorporated. So that is a key consideration here as far as the objectives. And then on top of page 8, the limitation on the distribution of profits and assets. Under 264, a corporation to which this part applies, which is Community Development Corporation, shall not make any distribution of profits or make any distribution of capital or assets on liquidation, dissolution, or otherwise, unless that distribution is approved by order of the Lieutenant Governor and Council. That again is a very, very relevant consideration in this case. We suggest, and the reasons for that will become clear shortly. So, as I've stated, the review of the sections confirms the objectives and limitations in NPDC as to their business, which is social and economic development, and the objectives, which is not to generate profit for the shareholders, but to reinvest the revenue to meet those objectives of social and economic development, and of course the prohibition on the distribution of profits or capital of assets unless approved by the Lieutenant Governor. So the articles, I note that the articles of North Portage include the statements that it is required to include under section 262 sub 3 in Schedule A, which is segment of which is indicated there. It states that the business of the corporation is restricted to fostering social and economic development of the North Portage area in the city of Winnipeg. So that's consistent with their status and the requirements under the Corporations Act under Part 21. So moving on then to page 9, FNP Parking is, as I mentioned, a wholly owned subsidiary of NPDC. 100% of the shares of that subsidiary are owned by NPDC, and the directors and officers of the two corporations are in fact identical. Any revenue in excess of the expenses is permitted to be distributed to the shareholders, and this is the mechanism by which income is moved from the subsidiary to NPDC, and of course only NPDC as the sole shareholder. Any revenue that's transferred to NPDC must, of course, then be used to further its objectives as a community development corporation. And as I mentioned, the distribution of those profits would continue to be prohibited absent an order of the Lieutenant Governor and Council. So I've just included a segment from the financial statements that sets out the statement of the corporate structure and confirmation of the basis of the consolidation. And on that segment there, under the basis of consolidation, the first paragraph talks about the different subsidiaries that are included in the statements. And in the following paragraph, they just state that control is achieved where the company is exposed or has rights to variable return from its involvements with the investee and the ability to affect those returns through its power over the investee. And that's certainly the case as between FNP Parking and NPDC. Now, the status of NPDC and its subsidiaries as a corporate family is, of course, they exist in order to advance social and economic development rather than to generate profits. And that's reinforced when one examines the consolidated statements from the corporate family Those, as I mentioned, those consolidated income statements are attached, and I've summarized the results with the comprehensive income or loss of the corporation and its subsidiaries between 2010 and 2017. The cumulative or aggregate results from that 8-year period is actually a net loss of $143,495. That is not in any way surprising, considering that the objectives of this corporation and its corporate family is not to generate profits, but rather to promote social and economic development. So while certainly if it was a private company whose typical objective is to provide the benefit, returns, and profits to shareholders, that certainly that would cause some pause and considerable pause if it was a company with those objectives in mind. But as a community development corporation, it is in no way inconsistent with their objectives, and therefore it's surprising to see that. So and I'm now on page 10, with the primary objective of MPDC and its subsidiaries in mind as to social and economic development, the next step in the analysis is to determine the status of the corporate family, including MPDC and its subsidiaries, under the Municipal Assessment Act and the City of Winnipeg Charter. Now, when one reviews the sections relating to the business assessment and business tax, we are suggesting it's pretty clear that this corporate family should not be liable for business tax or liable to business assessment, and shouldn't be assessed for that purpose. So now going to some of these sections in the two pieces of legislation that bears out that intent. So the starting point, and this is initially now under the Municipal Assessment Act. Under the Municipal Assessment Act, under Section 29, and this is a positive statement. There's actually a positive statement as to who should be assessed, and then there are exclusionary statements that then identify those persons that should not be assessed. So under 29, this is one of the positive statements where they say, where a council provides for assessments for purposes of business tax, the council shall levy the business tax on persons who engage in an occupation, art, profession, enterprise, or livelihood for the purpose of making money for profit. So that is the positive statement, where if you've got a company whose obviously stated objectives is to make a profit, and that of course would apply to all private enterprises out there whose objectives are exactly that, then they should be assessed for business assessment and business taxes. Now, an exclusionary statement is then seen under Section 30, where the same act states the business premises of a political, friendly, trade, professional, or labor organization, whether or not incorporated, where the organization or association is not operated for profit or for the personal gain of its members, is exempt from the imposition of a business tax by a municipality. So that's the exclusionary section, and clearly the intent there by the legislature is to exclude those persons whose objectives is not to operate for the profit or the personal gain of its members, and therefore shouldn't be liable for business tax. Going on into page 11 and the provisions of the charter. So this is, I'm going to suggest, Mr. Chairman, even further, it provides even more clarity, I should say, to the issues that we're examining this morning. So under 316, this is again the positive statement, which under the charter, which states that subject to subsection 3, and subsection 3 is, in my view, the sort of crucial section that provides the intent in this case. Subject to subsection 3 in 317, premises used or occupied by a person for carrying on a business in the city, whether or not the person resides in the city, must be assessed for business assessment equal to the annual rental value of the premises. That, though, is tempered then, and this is where I believe NPDC and its affiliates would fall under and should therefore not be assessed. 316.3 states subsection 2 does not apply to premises, and subsection A doesn't apply. It's where the city assessor finds it impractical to determine. But subsection B, the use for which is not for the preponderant purpose of earning a profit. So certainly that, from our perspective, is a clear indication that, similar to Section 30 of the Municipal Assessment Act, But even more clearly here, much more clearly here, if you've got a company or a business that the use for which is not for the preponderant purpose of earning a profit, then the business should simply not be assessed. And there's a slight distinction. Recall that the sections in the Municipal Assessment Act actually refer to business, or Section 30, I should say, refers to business tax, so which would imply an exemption. Section 316 sub 3 actually applies to whether the business is even accessible or not. So the sub 316.2 provides the authority for the business assessment to be made. 316.3 states that the business assessments should not apply to premises, the use of which is not for the preponderant purpose of making a profit, and therefore should not be assessed in the first place. That actually is consistent with our experience, where you've got, for instance, charitable organizations that exist, then typically they don't even hit the business assessment goal. And we're suggesting that MPDC and its affiliates, because of the status as a community development corporation, should also not be assessed. So then, moving on, when read together, we're suggesting these sections demonstrate a clear intent on the legislature to exclude those entities whose existence is predicated on objectives other than earning profit. So the positive statement, as I've mentioned, is contained in Section 29, which states that the business tax shall be levied on those on persons who engage in the occupation, etc., for the purpose of making money for profit. That's specifically not NPDC's purposes at all. Their purpose is, of course, to foster social and economic development. And an ancillary goal, and I've mentioned this, an ancillary goal of the corporate family is to ensure financial self-sufficiency. Self-sufficiency is, of course, much different than the objective of making a profit. And that was again borne out by the financial results of the NPDC and its affiliates. The exclusionary statements, as I mentioned, we believe would very much confirm this intent. The Section 30 of the Municipal Assessment Act exempts business premises from businesses for a political, friendly, trade, or professional labor organization where the organization is not operated for profit or for the personal gain of its members. As a community development corporation that's wholly owned by the three levels of governments, we think that the NPDC corporate family would properly be considered a trade organization or a political organization. But of course, we're not. One could certainly reach that conclusion, but we're actually reaching the very same conclusion via Section 316 sub 3 of the Charter. So, and this is what I say on the top of page 12. Even if one did not consider the NPDC corporate family as a quote unquote political or trade organization, Section 316 sub 3, we believe, is the full and final authority. The key phrase in 316 sub 3 is the preponderant purpose of earning a profit. And now the word preponderant is not defined in the Charter, but I've just added for the board's benefit the definition out of the Merriam-Webster dictionary, and as one would expect, preponderance defined as having superior weight, force, or influence, or greater prevalence. That's what we would have expected defined for that term. And that, of course, is absolutely not the case from both the actual results and the statements of the objectives of the corporation. The intent here is the primary objective, I should say, is not to make a profit, but to achieve financial self-sufficiency. That's very, very different than having a preponderant purpose of profit. So then to conclude on page 13, we're suggesting that phrasing that no business should be assessed where the preponderant purpose is not to make a profit. It puts NPDC and the corporate family, its affiliates, squarely within that section of the legislation. NPDC, recall, is a community development corporation, specifically then governed by Part 21 of the Corporations Act. The and that section, or that part of the Act, prohibits the distribution of profits except on order of the Lieutenant Governor and Council, which of course has never been sought nor granted. The preponderant purpose of NPDC and its affiliates is not to make a profit, but to promote social and economic development in the defined areas while striving to be only self-sufficient. So obviously very, very different objectives. FNP Parking is a wholly owned subsidiary of NPDC, may transfer funds to NPDC and NPDC alone for the parent company to use for its stated purposes, which is again the social and economic development with a prohibition on the distribution of profits. And of course, the actual results of the corporation and the corporate family highlights these very different objectives rather than profits, with a overall a net loss of roughly $143,000. So based on all of that and a read of the sections of the legislation that apply, we're suggesting that the business assessment should not be made for NPDC and its affiliates as a community development corporation, and we're requesting that the board order accordingly. So as I've mentioned, I have submitted as supporting evidence for this, and Mr. Chairman, just to be clear, the submissions for the remaining two roll numbers that are on the docket this morning for NPDC and its affiliates are identical. The attachments are identical. So having gone through it once, I don't think we need to repeat it the second and third time. So going through the attachments with respect to these submissions on page 15, I should say, is a copy of the business assessment audits. Pages 16 through 23, that is the corporate profile of the Forks North Portage Partnership, which includes NPDC, Forks Renewal Corporation, and its affiliates, and it actually gives a couple of great indicators of its mandate and mission, which has nothing to do with profits. It has everything to do with economic and social development. It lists the shareholders and the directors of the partnership, and also contains, when you go on the web, the links to the financial statements for the corporate family. Then from pages 24 through page numbers 24 through 44. So 24 through 44. This is the entire financial statements of North Portage Development Corporation. These are the consolidated statements that include NPDC and all its affiliates. Of course, they're combined to present them in one consolidated statement. And that is a fairly lengthy document, but I wanted to provide the full financial statements for the board's benefit in case there was anything in there that the board wished to review further. And then at pages 45 through 54 are the articles of incorporation of both NPDC and FNP Parking, crucially confirming that FNP Parking is a wholly owned subsidiary with 100% of the shares owned by NPDC. At pages 55 through 58 are the corporate profiles that we've obtained for each of the two companies, again confirming A, that shares are held by NPDC, and B, confirming that the officers and directors of NPDC and FNP Parking are indeed identical. At pages 59 through 62 are the consolidated comprehensive statements of income, and those are the figures that I referred to in my materials, where over the 8-year period, the total income and or losses of the corporate family resulted in an aggregate loss of roughly $143,000 over that 8-year period. So subject to any further questions, those are my submissions both for this roll number, but also the remaining two roll numbers for business assessments in the name of the corporate family.
Thank you, Mr. Reimer. Mr. Spacek, any questions of the applicant?
If it's okay with everyone, I sent Bell in a little rebuttal package. Would it be okay to hand that out, and I'll just ask a couple questions and go through the rebuttal all together? Does that make sense?
Sure.
And that's already found in the folders.
Belling, do I have this?
Right. Sorry, I'm forwarding that right now. You should have that in a moment.
Bellen, is it at the end of the files or where is the?
It is at the very top.
Oh, it's at the top. Okay, sorry, hang on. You know, I'm not seeing it here.
You might need to refresh your page.
Okay.
And if you refresh it, it will be the second A&T document under item 1.
Okay, you know what? I'm just okay. Hang on here.
Unless your sorts by modified, then it'll be at the top. It depends on how you're sorting your folder.
Oh, I got it. Thank you.
It's under item number 1. It's just the last document.
The last document should be
It's a P&P rebuttal.
okay. No, there it is. I couldn't. Yeah. Okay.
Okay, just to confirm, I have the email, Bellen.
Okay, thank you.
All right, Mr. Spacek, the floor is yours, sir.
Thank you very much. And I'll just start with a question, if you don't mind, Mr. Reimer. So I was trying to, when I was researching this yesterday, I was trying to find, do you know if the Forks North Portage Development Corp is registered as a not-for-profit?
Well, no, they're not. They're not a charity. They're not a registered charity in any sense, and that's not our submission. That's what you mean.
Okay.
When you mean registered as a not-for-profit, you're talking about charitable registration.
Yeah, I'm when they are registered.
No, they're not.
Okay, so and then
no, they're not a charity. Absolutely not.
Okay, thank you. And my other question was that came up. What for the distribution of profits? Do you know what happens to those profits? If on a year, revenue. Yeah, on a year where they have profits, like where that money that is earned, where is it sent then?
Where does it go? Where does it go?
Absolutely, right? Yes, please.
Okay, a very good question, and that's what I alluded to earlier, where as a community development corporation, any revenue in excess of expenses goes back into the economic and social development mandate of the company. So to be clear, Mr. Spacek, and your question's a good one. The reason for the prohibition on distribution of profits to shareholders is that they don't want the revenue to become just another slush fund for the governments that own the company. It specifically prohibits that distribution, and it's reinvested in projects that are part of the mandate of NPDC in the defined geographical areas. So at all times, the profits never leave NPDC. They're always reinvested for those purposes.
All right, thank you. And so if you look at page, sorry, I'll go by mine's the same. I'll go by page 2 of the PDF sent as my rebuttal. One of the questions that came up is, what are other similar, community development corporations or not-profit that where there are exemptions in place? What comes up on their business searches? Like, is this the same as that? Is it different? And what we've put together here is we did a company search was done for North Portage Development Corporation on page 2, and this is showing, you'll see in the red box, entity type, business corporation, right? If you scroll down to page 5, conducted the same company search from the company's office for FNP Parking Limited, which is the corporation or the taxable party of the business assessment we're looking at for this property, a subsidiary of the North Forks Corporation, but it also entity type business corporation. And if we scroll down to page 8 of my rebuttal brief, we did a company search for the Forks Renewal Corporation, same thing, business corporation. We turn to page 11, company search for the Forks North Portage Partnership. It also came up, business name is a partnership. And then to compare to see, is this, are we looking at the same under other, for this is, I'm not saying it's a charity, but this is a company search charity, Dores Inc. This is an example of a company search for a nonprofit corporation. This is the company that operates the parking at the St. Boniface Hospital. And I wanted to see if there's a difference. And you see, this is obviously a nonprofit corporation. So the way it was registered when it was incorporated, a nonprofit corporation. And if we scroll down to, we looked at another one, company search, Darcy's Ark Thrift Store Inc. So below is an example of a company search for a nonprofit corporation. And if we scroll down to page 16, is where, I looked up the definition of community development corporation, got an understanding of what it was. Similarly, Center Venture Development Corporation is one that's located in Winnipeg. And this search shows entity type circled in the red. It's a nonprofit corporation. We scroll down again to page 19 of the PDF. We have the Southeast Resource Development Council Corp. This again, entity type, not nonprofit corporation. And we also did a search for the North End Community Renewal Corporation on page 21. So another community development corporation, and it is entity type nonprofit corporation. We scroll down to page 24, First Peoples Development Inc., another community development corporation in Winnipeg, entity type nonprofit corporation. And again, you'll see the theme of my rebuttal is that at least what I'm seeing as I research this is that there seems to be there is a goal for profit for this, and it is not necessarily a nonprofit. And I do believe that, as Mr. Carey stated, the important subsection of the Winnipeg Charter that we are looking at today, and let me just open it up here so I have it for the rest of this. Again, so the exception under the Winnipeg Charter, section 316, subsection 3B, the use of which is not for the preponderant purpose of earning a profit. I have a few more points to make on that, and you'll see that I've included the consolidated financial statements for North Portage Development Corporation for the year ending March 31st, 2018. So this is right before the reference date of April 1st, 2018. If you look at Mr. Reimer's, I believe his is on page 8, he has included the year-end financials from 2010 to 2017, and you'll see there's a total loss of 142,495. I've also added the 2018 on there, the most recent one. And if you add on, you go to my page 29, so a few more pages down, you'll see in red that for 2018, a profit was shown of 690,714, and when added to, if you look at 2010 to 2018, there's a profit of 547,219. So again, not a loss. Depending when you look at it over those years, some years loss total, but again, up to the reference date when we're looking at this property, there's actually a profit over those 8 years. Let me just get to the right page here. And when also researching the definition and information on the Community Development Corporation that all those subsidiaries are under, the North Portage Development Corporation on my page. Everybody can scroll down to page 47. I did find on the provincial website, provincial government website, and I've linked it, but we have a handbook, the Community Economic Development for Community Development Corporations, which it's just a guide on different definitions, information, all regarding what are these community development corporations. And one interesting section I found was these CDCs and their accounting, the way they account. It makes a difference to show what type they are. And when I looked at the Forks, the one we're looking at today, the way they are, well, I'll just read this out so you understand. Government organizations are classified into one of 3 types. They can be either a government business enterprise, GBE, a government not-for-profit organization, so that's a GNFPO, or an other government organization, OGO. GBEs are required to follow International Financing Reporting Standards, IFRS. CDCs do not meet the necessary characteristics required to be considered a GBE. GNFPOs are required to use either PSAB or PSAB with the 4200 not-for-profit series. OGO are required to use either PSAB or IFRS. CDC management should discuss with their accounting professionals as to whether they are a GNFPO or an OGO and what accounting framework would be best for them to follow. So just to make more sense of that, not-for-profit organizations, GNFPOs, do not follow International Financial Reporting Standards, which is IFRS. They are required to use specific Public Sector Accounting Board, PSAB, not-for-profit series reporting forms. When you look at the 2018 financials, which I've attached, the auditor's report on page 2 of their PDF, states that NPDC's cash flow and consolidated financial statements are reported in, quotes, accordance with International Financial Reporting Standards. So that's the IFRS. In addition, page 9 of the PDF of the 2018 financial states, in bold here, statements of compliance. The financial statement of the company have been prepared in accordance with International Financing Reporting Standards, that's the IFRS, as issued by the International Accounting Standards Board. The accounting policies have been applied consistently in all material respects. So really, I'm just showing today that the Forks has consistently reported all their year-end financials in the IFRS standards, which according to the CDC handbook, it would be, if you're reporting that way, you would not be a government not-for-profit organization. You are considered an other government organization, which, to me, it shows again that there is a reason the Forks is making and pushing to have a profit. It's not just a simple not-for-profit organization and not as easy to give that exemption. And I have also included a couple Court of Queen's Bench orders. The first one on page 48, this was the Love Day Mushrooms Farms versus the assessor for the city of Winnipeg. And really, this is one of the important decisions and orders regarding preponderant purpose of earning a profit. They defined what that is, and really, with I won't go super deep into it, but one of the major points of that Queen's Bench order is that the applicant, number one, has the onus to prove subsection 316.2 does not apply to, again, for exporters, that the preponderant, that they are not, again, their main reason is not to make a profit. And then it's important to note that the judge also determined in there as a business, under a business under the City of Winnipeg Charter, under the Winnipeg Charter, the definition of business, and that the business may earn a profit, and it will not apply. So it doesn't necessarily have to, show a loss and to not be making a profit, but just the fact that it's trying to and can make a profit is enough to not be exempted for that reason. And if you scroll down, I've included one more. So if you turn to page 57, I've just included the Court of Appeal of Manitoba, City of Winnipeg and business assessment. This was the Royal Trust versus the assessor for City of Winnipeg. And again, the only reason I included this one was just for, at the start of Mr. Reimer's rebuttal, he states that he started by saying that the Municipal Act applies, section 29 and 30, which in this order, this is the order that kind of set the precedent that that the Winnipeg Charter is kind of what takes lead or rules when it's coming to business assessment. And after this order, and when they rewrote the charter in 2002, it states that under section 316.1, the Municipal Act applies. It's really just saying that the Municipal Act applies to, like, when you're looking at business assessment and charter, except those in section 3 and subsection 17, subsection 15, 16 of that act applies to business assessment in the city. And if you look at what this section 3 is in the Municipal Assessment Act, it is City of Winnipeg exempted, sections 8 and 28 to 30, which are the ones that Mr. Reimer is speaking about at the start of his presentation, and 34 do not apply to the City of Winnipeg. And I know at the end he went through and he did explain that, hey, and I think we're in agreement that the City of Winnipeg Charter is what we're looking at here. And really, that's what leads me to looking at that one subsection, or one section 316 2B. And I do believe we're in agreement of that, but that is why I included that, just to show that really no weight should be put on what the Municipal Assessment Act is saying in sections 29 and 30. And I just included one more order. This is an older one on page 65. This is actually one of the properties that is being heard in the future with FNP parking in a week or so, or maybe a few days. But it was heard for liability in 2009, I believe. And I just want to point to the decision that the Board of Revision, the panel actually based their decision on the liability, that it is liable, and that if the bottom under details, the panel based their decision on evidence given that some of the stalls seem to be revenue producing. So I think it's important, and what I'm trying to say with all this is that the FNP parking is, in my eyes, it is trying to garner revenue, and it's not necessarily checking the box that it's it's not trying to make profit as its main goal, or one of the definition of preponderant. So that is, I believe, let me just go over one thing here. And yeah, and then since 2009, this is this is the first time the liability for this has been heard again. So that is my rebuttal. And if you have any questions on it, please let me know.
Thank you, sir. Mr. Reimer, questions in regards to the rebuttal?
Indeed, thank you. So, Mr. Spacek, let's go to the two cases you have submitted. I didn't quite catch what each of them was intended to demonstrate. So if we can go first to your page 48, this is the Loveday Mushroom Farms. So I'm familiar with this case. Now we can agree that Loveday Mushroom Farms Limited, that was a full-on for-profit private corporation whose whose corporate purpose is to generate profits for its shareholders, right?
Yes, absolutely.
Okay. So Loveday is entitled as such as a private corporation for profit. That's an entirely different type of company than, it's not a community development corporation who's got a prohibition on profit. Is that correct?
It is different structure than the Forks business for sure. Absolutely.
Okay, so this, remind me now, because this is, can you point in the case to the statements that would support the city's submission that this case would somehow support not, or would somehow support assessing NPDC and its affiliates in this particular case? Because I couldn't find anything in this case that really spoke to it one way or another. So what was it in that case that you'd like to draw the board and my attention to?
Yes, sorry, let me just try to find here where I have it. But again, what I'm trying to, and I will scroll through it here and try to find the exact parts, but I'm the relation between this hearing and this order and what we're talking about today, there is a part where the applicant has the onus to prove that subsection 316.2 does not apply. I'm trying to just show that the onus is on you, and it's been shown that you have to prove that it is not for the preponderant purpose of making a profit. And I'm just trying to scroll through where the judgment says that. So if you'd like to give me a minute. But does that make sense? Am I explaining that correctly?
I don't think it does, so that's why I'm asking the question. I really don't think it does, and so I'm wondering what I'm missing here.
Okay, sounds good. 1 sec, let me scroll through. So if you turn to just my interpretation of this page 6 of the actual order, which is page 53 of the brief.
Yeah.
So the decision is based on the analysis that Loveday is, that my take on this, that is a carrying on a business of the premise, and that the nature of its activity falls in the scope of the definition of business as the term is defined in the Winnipeg Charter. Loveday may make a profit. They don't always. They may lose. They may not, just as the Forks. And that is, as a taxpayer, has the onus of establishing that is exempt from taxation. So I'm just trying to show that the onus is on you, and it's the other evidence I'm presenting is just part of that argument.
Okay, well, to be clear, Mr. Spacek, no question the onus is on, well, so the onus is on the taxpayer with respect to liability to taxation. This actually involves more of a liability to assessment, but I'm accepting that I would have the burden in a practical sense either way. So total agreement on that. But then I guess where I don't, Mr. Spacek, are you then, can we agree then, just to be clear, can we agree this case in no way would support the notion that the Community Development Corporation should be assessed? It certainly talks about onus, and no qualms there. But I see nothing in here. In fact, I see statements that I'm going to bring up in the decision that's the opposite. You're not suggesting that this case somehow supports the notion that NPDC or supports affiliates as a Community Development Corporation are assessable or taxable.
I'm not trying to relate to the actual Loveday Mushroom Company to the Community Development Corporation.
Or this case as supporting the notion that NPDC should be assessable or taxable, correct?
I'm not. No.
Okay. I'm not going to belabor that, so thanks for that. So with respect to then second decision, the Royal Trust decision, again, please remind me if you would, what this was submitted for?
Just to bolster my take that and as you have said in your order, but that the City of Winnipeg Act rules over the municipal act when it comes to the City of Winnipeg Charter. Takes precedent over the Municipal Assessment Act. And I'm just, when you put in subsection 29 and 30, it didn't make sense to me, because when I reviewed this and the orders that I've made after, it's that those 29 and 30 are exempt from the City of Winnipeg, if that makes sense.
Sure, good. Yeah, no, that does make sense, and certainly no qualms. At the end of the day, I'm showing legislative intent and fully agreeing that 316, the section you and I are both referred to, would certainly govern here. All right. So, with respect to then the, now you asked earlier, and you submitted a number of corporate returns, and no qualms. We've submitted the same corporate returns in our evidence for MPDC and FNP parking. So there's absolutely no disagreement on that front. But the ones then that you submitted, starting at your page 13. So there's a number of returns that you submitted for nonprofit corporation, non-share corporation. And I recall you asked me if NPDC was registered. And I'm assuming you, again, to be clear, I've made the assumption when you say that you're asking if it's registered as a charitable organization. And I'm fully agreeing with you that they're not. Now, is it the department's position then that section 316 sub 3, which is what we've been referring to, are you suggesting it only applies to registered charities?
No, I'm not trying to say it only applies. I don't know all the exemptions that are granted under it, like offhand. But when I do look at others, like I want to see what are other community development corporations and what are they registered as, and the ones I looked up they are not the same as the fork. So it's just another question I have.
Oh,
is
sure.
this the same? And I think it's important to note that it's different.
Okay. Pardon me, I'll have more to say in response to this. The last segment, and certainly you've drawn the attention, so I'm now at your page. What would this be? Your page 29. And these are the same, not the same, but I've also submitted the financial statements for the years leading up to 2017. So on your page 29, of course, you've shown, and correctly, again, no qualms about this, there was a profit in what they're showing as a profit in 2018 of $690,000. So if then we can agree that over the years there have been, and that was merely the point I was trying to make, over the years there have been a pretty substantial mix of years in which they're profitable and not profitable, correct?
Yes, yeah, it looks like, and I'd have to look at your brief for the exact rundown, but yes, it goes, definitely there's years of profit, years of not profit.
Exactly. Okay. And again, we don't take issue with, and you don't need to turn there. I'll give you the benefit of just in my own brief. In 2010, the comprehensive profit was $595,000. In 2014, it was $564,000, and in 2017, it was $370,000. So in the years I've listed, certainly there's some years where the revenue does well exceed the expenses. But when I look at all that again, the crucial point, and I'm trusting Mr. Spacek, we can agree, as a community development corporation, those excess revenues cannot be distributed to the shareholders absent an order in council, correct?
Yes, I do agree that the framework of that company and how it's created, that is the purpose. I agree with you.
Okay. Thanks, Mr. Chairman. Those are my questions.
Thank you. Mr. Spacek, do you have anything further or anything further to present?
No, I believe that is everything. Thanks for the time.
Thank you. Ms. Stevens, questions in regards to the assessor's presentation? We'll deal with his first. Okay.
Okay, so we're dealing with questions regarding the rebuttal first?
Yes.
Okay. No, I don't think I have any questions regarding the rebuttal. Thank you.
Okay. Mr. McIntyre, regards to the rebuttal?
I have no questions, Mr. Chair.
Okay. So can we go to, I guess, Carrie's presentation? So Ms. Stevens, do you have any questions in regards to his presentation?
Yeah, just just to clarify, the parkade is intended to operate to produce a profit, which is then allocated back to the parent organization, the Forks North Portage, correct?
To the extent that they can, absolutely. The quick answer is yes, because Forks North Portage, it's similar to a charity, and the question is a good one, but recall that my entire submission is based on preponderant purpose of making a profit as it relates to NPDC and its affiliates. So there are certainly segments, and FNP parking would be one of them, that generates revenue for NPDC to reinvest. And without that revenue, unless the government was simply going to operate it as, as a complete, fully funded as a community development corporation, it would be much different still. But recall the goal, and this is fully in their corporate profile. The goal is to be financially self-sufficient. So absent the operations of the parkade and some other operations that they're involved with, they simply wouldn't be financially self-sufficient. So the word profit, that's one part of the Section 316, if you recall. But the predominant purpose of NPDC and therefore its affiliates, because ultimately everything flows up to NPDC from these subsidiaries. So the predominant purpose is not profits. So one can't view that word profit, Ms. Stevens, there's no question they're generating a profit. Defining profit as excess revenue over expenses. But when you think of the word profit, there's profits in terms of, the private corporations whose very existence and corporate lives depend on distributions to shareholders, keeping the shareholders happy and making money and strengthening the financial position. That is certainly not the predominant purpose here, but an ancillary purpose is be self-sufficient. So absolutely, it's generating a profit in the sense of the revenue in excess of expenses. It is not; those are not funds that can be distributed in any way. So that's the distinction.
Okay, I think that's all I have. Thank you.
Thank you. Mr. McIntyre, questions?
I just have one, maybe two questions on the assessor's rebuttal. And Carrie, I think you have the same financial statements in your brief.
Actually, Mr. Spacek's included the 18s and I had the 17s. I hadn't realized it was a March year end. So yes, we've each got one full set.
If I look at page 30, statement of changes in equity, North Portage Development Corporation, certainly even as of March 31st, 2017, which is the statement you have amassed retained earnings of some $9 million.
Oh, yeah, absolutely. So now that's, so they are in a position to fund and operate, A, hopefully being self-sufficient, and B, to the extent that they've got the retained earnings, they can reinvest it for those same purposes. But again, the entire test being the preponderant purpose of making a profit, that phrase in my submission indicates that the profit is intended to be a distribution of profits as to what a private company does, and I'll give you another example. So consider a charitable organization like the Canadian Cancer Society. So they are going to have excess revenues over expenses, and they will be, of course, trying to fundraise and generate as many donations as they can, so that they've paid for, all of the all of the capital that they've purchased. They've paid for any staff costs and all of these operational expenses, and then they have money to reinvest in, which is the real objective, have the money to reinvest in research. So the charities are going to have a certain amount of capital assets and things that they require just to be able to operate. And don't forget, in terms of the retained earnings and the overall position, NPDC and its affiliates, there's some pretty substantial real estate holdings, but it's not for the predominant purpose of distributing profits. So this CDC still has to be able to A, fund itself, and B, provide itself with the leverage, absent further government contributions, provide itself with the leverage to make the reinvestment in the projects and fulfill its objective as a CDC. And so when you're talking about think about the Forks and that huge, that's very huge area. Think about North Portage, in that segment from Main Street all the way through to 447 Portage. These are very, very significant holdings, and we're not arguing that. But these significant holdings, which would then result at the end of the day in significant retained earnings, are not distributed, so they are revenue in excess of expenses, and there is an accumulation of that retained earnings. But at the end of the day, that is what is then used to fund the same projects for social and economic development. That's the reason for its existence, not to make distributions. So again, under 316 sub 3, the preponderant purpose of making a profit, I'm suggesting, is a legislative intent to exclude those businesses, not where they have revenue in excess of expenses, because that's everybody, whether you're a registered charity or not. You want to generate revenue over expenses so that you're able to continue on with your real objectives, which in the case of the Cancer Society, for instance, is research. In the case of NPDC and its affiliates, is social and economic development. So Mr. McIntyre, your question is a very good one, but it's not at all inconsistent with what I believe to be the legislative intent.
Okay, thank you. That's my only question.
We're going to take about a 5-minute break, but I just have one question, and then we'll come back to after the recess that we're going to have. Mr. Reimer,
would I have the?
Sorry.
Would I have the ability also to respond to Mr. Spacek's rebuttal at some point? It doesn't matter to me when. I just want to make
Absolutely.
it. Thank you.
Yeah.
Okay.
Just one question, Mr. Reimer. Was the on these properties in question, was the liability ever appealed before?
In past years, I can't comment on it. We weren't certainly. My quick answer would be I don't know, but certainly not in the recent past that I'm aware of, okay, unless it was prior to our involvement many years ago.
So I'll just leave it at such. We're going to take about a 5-minute break. I'm sorry, Gary.
Mr. Chairman, just in terms of your question, though, I'm asking this board not to make any inference on that. I believe certainly we're the first folks to turn our attention specifically to this issue. So I don't believe there should be any.
So it was just a general sort of question. Yeah.
Yep.
All right. So let's take a 5-minute break, and we'll get back at it.
So.
Okay. We're calling the meeting back to order. Mr. Reimer, I think you wanted to pose a question, or
actually, I just hope for a reply to Mr. Spacek's documents that he filed.
Yes. Go right ahead.
Okay, thanks. So, board members and Mr. Spacek, I'll be referring again to the PDF page numbers in the department's submission here. So, recall, Mr. Chairman, in my questions, I had asked Mr. Spacek about the significance of the Loveday Farms Queen's Bench decision that had been submitted, and actually, I believe the notions. Well, two things. I do not believe this would support an interpretation that NPDC shouldn't be exempt from business taxes or not accessible for business assessment. And in fact, I think it supports our argument. So I'm going to ask the board and Mr. Spacek to turn to page 50. Over here, yeah, 53, please. And while we're going to that page, recall, Mr. Chairman, there was some question I'd asked Mr. Spacek relating to the status of Loveday Farms. They, of course, are a private corporation whose sole purpose is to generate a profit for the benefit of its shareholders. That's the typical private industry model. You want to maximize that for the full benefit of your shareholders. Very much different than our NPDC, which has a prohibition on the distribution of profits, and whose main objectives are the social and economic development. But page 53 on at paragraph 12, and there's a couple of paragraphs that get to the point I'm making. Paragraph 12, the court states that Loveday argued that the preponderant purpose test in 316 sub 3 relates to the premises and not to the entity using the premises. Therefore, while it admitted that Loveday is a business that intends to make a profit, it argued that it is not relevant to determining the entitlement to an exemption because one must look at the predominant use of the premises only and not the entity using the premises. It argued that the predominant use of the premises in this case is the growing, harvesting, refrigeration, and packaging of mushrooms and not for making a profit. And as a result, the premises are exempt. Now, I'll just go on to state very clearly the court completely rejected this argument. And there is a very interesting, then if one moves down to PDF page 55, and the top paragraph, it states that the exemption in 316 sub 3 sub B relates to earning a profit. Profit relates to revenue, expenses, and income. A premises by itself is not capable of receiving revenue, incurring expenses, or having any income. One must have an entity carrying some form of an undertaking to earn a profit. As a result, it makes no sense to relate the exemption to the premises rather than the entity operating on the premises. And that's our very point, Mr. Chairman. If this parkade was being operated by an entity, by a private entity, obviously they're fully taxable, whose objective is to distribute the profits and maximize the profits for the benefit of its shareholders. That's specifically what we are submitting is not the case here, and why we're asking that the board make the distinction based on the wording of 316 sub 3, which is predominant purpose of making a profit in the context of the entity that is used, which is what this decision is saying. You have to look at the entity, not the premises itself. And the entity in this case is explicitly a community development corporation, therefore subject to Part 21. And with the two things, the prohibition on profits, but also the predominant purpose of NPDC and its affiliates is for social and economic development. Full stop. Full stop. It's not profits. It's being self-sufficient. Absolutely. Is it going to seek to generate revenue so that it can be self-sufficient? Absolutely. Is it going to try and generate revenue so not only can they be self-sufficient, but they can achieve their primary objectives of social and economic development by reinvesting in those geographical areas? That's the entire reason for its existence. Entirely different than profits for the distribution to shareholders. So it's those very things that this case talks about and that we are suggesting should be taken into account. Mr. Spacek properly put in the 2018 financials, and we're in agreement. There are some years when the revenue exceeds the expenses, and there's some years where there's a loss. And if one were a private corporation, quite bluntly, that had these kind of financial results, it would be considered to be an exceptionally high-risk company and one that is simply not profitable in the long term. But that's not, its mandate isn't to show a profit. Its mandate is to act as a driver of social and economic development. So, Mr. Chairman, for all of these reasons, and with reference to that Loveday case, those are my comments. Thanks.
Thank you. Mr. Spacek, I think for the record, we'll probably have to go through your presentation, and then there'll be questions, and then we'll have a summary. So, Mr. Spacek, I know that you're agreeing in regards to quantum, but for the record, I think we should read it into the record. Mr. Spacek?
We are looking at roll year 2022. Business assessment ID 24606. This is the parkade at 447 Portage Avenue. We have a 2022 annual rental value of $306,360. The parkade has 185 stalls, and you know, I am asking today that this $306,360 be confirmed. Thank you.
Thank you. Mr. Reimer, any questions?
No questions.
Panel members, any questions?
No questions.
No, I have no questions.
I think that probably, Mr. Spacek, if you want to do a summary, the floor is yours.
Thank you very much. Just very quickly, just to reiterate my thoughts from the rebuttal. Again, with all the information I put together with the Community Development Corporation Handbook, how the company consolidates and reports its financials. Again, it just seems to reinforce my thoughts that you know, this company can make a profit. It wants to make a profit to reinvest in its mandate, and it is not considered a not-for-profit organization accounting-wise. And again, I believe that is enough to not exempt it under 316(3) Section B. Thank you.
Thank you. Just forget where we were.
Summary. Carrie has the right.
Summary?
Or Carrie can, yeah,
Okay.
make a summary.
Okay. Mr. Spacek, would you wish to summarize?
That you can take my last one as the summation. Thank you.
Mr. Reimer, do you wish to summarize it all?
Just a very quick summary, as I've mentioned, and I appreciate Mr. Spacek's submissions and the board's attention to this. Recall, we're not talking about an entity. The requirement of 316 sub 3 is not nonprofit. It's not registered charity. The predominant purpose of making a profit is explicitly not what NPDC and its affiliates as Community Development Corporation subject to Part 21 is there for. It's very clear in Part 21. Specifically, there's a distribution or a prohibition on distribution of profits, and the objectives explicitly are social and economic development. So when one looks at that in combination with 316 sub 3 with a predominant purpose test, and all of the financial results and all of the work that, and quite frankly, NPDC obviously and Works Renewal Corporation and the partnership have been quite successful on many fronts, and that's what they're there to do. But it's not for the profits are an ancillary purpose to be self-sufficient so that it can achieve its main goals. Mr. McIntyre's question was a very good one about the retained earnings, and quite frankly, our summary and that supplemented by Mr. Spacek as to the comprehensive income, there's no question it's generating in some years an income that exceeds the expenses, so it can use that and the retained earnings to the extent they're available to fund its core operations, which is social and economic development. So Loveday Mushrooms talks about the fact that it's not the premises, it's the entity that one has to look at. The entity in this case is a community development corporation with objectives, predominant purposes, explicitly not being profits. There's no requirement for explicit. Mr. Spacek had talked about registrations as nonprofits and possibly charities. That's, with respect, that's not the test. The test is predominant purpose of profit, and NPDC's predominant purposes are economic and social development, ancillary, but not primary purpose or predominant purpose of profits. Thank you. And Mr. Chairman, if I can ask that all of the comments from myself, all comments and questions, all of Mr. Spacek's comments and questions. I think, unless Mr. Spacek has a different idea, but if we could ask that to be carried forward to the other two business assessment board members that are on the docket this morning that are held by the corporate family.
Thank you, sir. We're going to go to the last one on the docket, which is 820 Taylor Avenue.
Main Street, that's unit 1.
Well, I thought that was going to be under all of them, but you want to do.
I think that the assessor has to read the ARV.
Okay, on the 123.
Unit 130.
Okay. Mr. Spacek, 123 Main Street, Unit 130.
No problem. Let me load that up, please.
Okay. Just read it into the record.
No problem. I'm just opening all the wrong briefs here. Unit 130, 123 Main. All right. So we are looking at roll number 2022. Or sorry, roll year 2022. We have the bid 33182. This is unit 130 located at 123 or 123 Main Street. We have an annual rental value of $79,260. We have a premise that is 6,320 square feet with an overall ARV of $12.54. And I would ask today that the 2022 ARV of $79,260 be confirmed, please.
Thank you. Mr. Reimer, questions?
No questions on the quantum. Thank you.
Okay. Ms. Stevens, any questions?
No questions, thank you.
Thank you. Mr. McIntyre?
I have no questions, thank you.
We'll go on to the last one, which is 820 Taylor Avenue. So Mr. Spacek, whenever you're ready.
Do you want me to do the 123 Main parking quick and get that out of the way?
Yes, might as well. Sorry.
All right, no problem. I'll just do we have the roll year again, 2022. This is the surface parking at 123 Main Street. It has a business or a bid of number 40205. It is 79 stalls at $103.50 a stall for a total ARV of $98,100. And I'm asking that be confirmed today, please.
Thank you. Mr. Reimer, questions?
No questions on quantum. Thank you.
Panel members, any questions?
I have no questions, thank you.
I have no questions, thank you.
Okay, thank you. Now we'll go to 820 Taylor. Mr. Spacek, please.
No problem. Just give me one moment to open that up,
Okay,
please.
No problem.
Thank
No
you.
problem.
I'm going to load that over here.
Sorry, did we read on unit 130?
What is that again?
At
Yes.
123 Main Street? We read both of them on? Okay.
Yeah.
Sorry, go ahead.
All right, thank you, everyone. I'm going to do 820 Taylor now. We have a business ID of 26,715, roll number, roll year 2022, and address of 820 Taylor. This is, the Manitoba Hydro building and all of the smaller storage warehouses and vehicle service garage area that is located around the building, around their compound. And we have a total annual rental value of $626,400. The square footage of all these buildings adds up to $61,975, and we have an overall ARV of $10.11. You can see that we have this. I believe this used to be all one square footage, but it has recently been kind of organized and cleaned up into separate sections to better value these respective sizes and different characteristics of properties. But you can see we have 6 premises on this property, range of square footages. So I'll just read them off so everybody has an idea of what we're looking at today. But we have 820 Taylor, which is a 2,000 square foot, I believe the basement area of the building, which we have as at $4.71 a square foot. And so that's 2,000 area. It's fully heated, electrical, water, air conditioning. All those occupancy costs are on this one for a total annual rental value of $14,340. We have 700 Harrow Street. So let me look at it, which is 7,000 square foot. So if my memory serves correctly, this is the basement area. It's actually at $2.12 a square foot. It is with occupancy costs, we have 29,880 total annual rental value. If you go to my third premise, we have main floor 700 Harrow Street. This is at $6.46 a square foot. And again, storage warehouse area of 21,807 square feet. We have occupancy costs for the heat, electric, and water, and no air conditioning on the remainder of the properties. But we have a total annual rental value of this portion of the property at $186,900. And if you go to my fourth premise, we have 700 Harrow Street, and this is vehicle service garage portion, so large garage area, has the vehicle doors to work on the trucks and other vehicles, and it is at $9.70 a square foot for a total annual rental value of $256,920. You turn to my fifth premise. This is premise ID 26049. We have 2,300 square foot remaining on this property. It's at $8.72 a square foot. We have 24,900 annual rental value attributed to that. And we have another VSG portion as the last premise. This is 100 Sparling Avenue. This is again, another standalone kind of garage area with doors, vehicle service garage. And we have 7,050 square feet at $12.45 a square foot. So this is a total annual rental value of $102,660, and we have that all those added together, all those different properties and portions adds up to $600,000. I have included, because these properties are all VSGs and storage warehouses. I did include on my page 2 storage warehouse comparables. You can see we have 16 storage warehouse comparables ranging in years and sizes, but they are on the larger square footages. You'll see from 15 up to 22,000 square feet. So those larger standalone storage warehouse areas, and large rental range as well for these type of properties, but we have an average of $9.12 today. And on my page 3, you'll have to right click and rotate it, but again, this is our VSG comparables, so vehicle service garage comparables that we used for the 2020 cycle. These are some of the ones I've used, and there's a large range of 41 of them. They all kind of smaller in sizes, 0 to 1,000 to 10,000 square feet. Most vehicle service garages are on the lower end, but you can see large. There is a large rental range, but across 41 VSGs across the city, we have an average of $12.68, a weighted average of $11.92, and a median of $12. And I did notice. Let me just fix this back. That there is a map on the second page of the appellants that kind of splits up the properties well, so you can see, you'll get a good idea of which one of each of these premises represents a little better. But that is my presentation. Thank you very much.
Thank you. Mr. Reimer.
Thanks, Mr. Chairman. Mr. Spacek, have you had an opportunity, and I think I know the answer, but have you had an opportunity to inspect these premises?
No, not in person. I just went through the photos that one of my coworkers took as he went through and redid the whole property. So I've seen the pictures, but I haven't been there in person.
Okay. So we've got, and this is on your page 1 now, we've got 3, premise IDs that the department's classified as storage warehouse, and then 3 more that are classified as VSGs. So we can agree, and I'll tell you now, we can agree that the Sparling Avenue and the larger premises, this would be the 4th premise ID, has a number of grade level doors, but we can agree and if you don't know, that's fine, because I recognize you haven't inspected. There's no pits in any of the premises, and there's no specific HVAC systems in any of the premises, unique to things like their auto body shops with their unique air handling or garage, and there's no hoists in these premises. Were you aware of that?
Yeah, that is my understanding. I did sit down with the person that went through this and kind of talked it over and, tried to get the best understanding. So I am in agreement with you.
Okay. Then turning briefly to page 2. Now, and again, if you've got a different understanding, Mr. Spacek, let me know, but I had understood, or my review of the records, I should say, would indicate that the improvements on this site were constructed, most of them, and certainly the warehouses that would be to the north of Sparling. So virtually everything except the last premise, they were all constructed between 1933 and 1977, correct?
That sounds right, yes.
Okay. So then when we look at your chart, and I appreciate mathematically you've got the average and the weighted average there, but when one looks at warehouses that are sort of comparable in terms of age, then you've got the first one at $6, the fourth one down at 11, which is 1100 Waverly, which is more, I'd suggest to you, like a business center, but which this specifically is not. And then moving down, you've got 1120 Waverly at $7, 1036 Waverly at $7.60, Herbo at $1.20, which I'm not suggesting is market here, but certainly you've listed it. And the rest of the premises you've listed are significantly higher. So the range for comparable premises of a similar age is actually between $1.20 and $11. But if one takes out the outliers of $1.20 and $11, then really you're left with, I'd suggest, two comps of between $6 and let's say $7.60. Is that fair, just based on the data that you've presented?
Yeah, I would agree that, an older, unrenovated storage warehouse will generally lease for lower than a newer, nicer storage warehouse, yes.
And now again, for the VSG premises, the largest one, and I guess I'd suggest to you the one that's closest in size, and I'm going to go back to your page 1 initially. Sorry for jumping around. The 4th premise, which is the large VSG premise. So that premise is 21,756 square feet. And when I reference that, the 21,756, with what I'd suggest to you is the most comparable, that's comp number 16, which is 17,909 feet. That VSG rent being the closest, still smaller than, but the closest, that's at $8.15, correct?
Yes, that is correct.
Second last question. The second to last premise ID, the 2,300 square feet. And again, I want to be fair to you because I know you haven't been out there, but were you aware that this is an unheated Quonset?
Just let me double check. I know that is that building. 1 sec. Let me just confirm here with my notes. The smaller building beside 720. Sorry, which premise are we? The 2000? Is this the?
This is the premise ID 26049. That it's the 2,300 feet that's probably
yeah.
listed.
Thank you. Yeah, perfect.
Your colleague is the Quonset. Yeah.
Yeah, I don't know. Like, yeah,
So
I can't confirm it's unheated, but yeah, I confirm that is that standalone smaller building. For sure.
Quonset. Okay. Awesome. Thanks, Mr. Chairman. Those are my questions.
Thank you. Ms. Stevens, questions?
No, I think my questions have been answered. Thank you.
Okay, Mr. McIntyre?
I just have one question of clarification. On your brief on page 1, you show the total annual rental value of $6.64.
Yes.
Yet you have a recommendation to confirm the ARV at $615.6.
Yeah, my confirm it. I believe the total value is $615,600. I will just double check and confirm that as Mr. Reimer does his presentation. But I believe because this one had a because it had us up, I believe, last year, and it was updated that the premises is showing the proper annual rental values, and that 615,600, I believe, what was sent out as that value. But I'll just double check that as Mr. Reimer talks.
Okay, thank you. That was my only question.
Okay, thank you. Mr. Reimer, we're ready for your presentation.
Thanks, Mr. Chairman. And Mr. Spacek, just as for your information, when you're looking that up, I actually also showed 626,400. So I do have that as my starting point.
Okay, so I will just double check here.
Okay, Mr. Chairman and Mr. Spacek, do you want me to wait? Because I don't want you to, I want to be fair to you here, and I can wait.
I believe there is one way I can check very quickly, and then
okay.
If it requires more, I will let you know.
Okay, all right. So, Mr. Chairman, page 2 of our submission, what we're requesting this morning, this is the former Manitoba Hydro head office building and some related buildings to the south. And we're requesting that the business assessment be reduced from what I believe is the total of 626,400 down to 501,420. So towards the bottom of page 2, that's the map that shows the various premises. So the office building, which is shown at the bottom of the picture, 820, the current business assessment actually reflects a substantial reduction in the area occupied and therefore the overall assessment, because except for 2,000 square feet, that entire building of 820, which was by far the biggest area on the roll, has been vacated and has been vacated for some time. So Mr. Spacek had mentioned the 2,000 square feet that's left in 820, and that's the only part that's actually still physically occupied. And for the board's reference, we do not take issue with the 2,000 square feet as assessed in that building. So that is not part of the discussion this morning. The other buildings are shown on there as indicated in that photo, and there's a few of them, and they relate to the premise ID numbers that Mr. Spacek had presented in his materials. So moving then to page 4, what we've got, as I mentioned, this is the former head office building, mostly vacated except for the 2,000 feet. The majority of the rest of the buildings on site were constructed between 1933 and 1977. There was a couple of small additions up to 1983, but the majority, as I mentioned, of the space was improved in that prior period. So significantly older improvements in this case. So towards the middle and I guess bottom of page 4, there's a number of premises that the department's assessed, and we actually don't take issue with it. So that 2,000 square feet, which is shown as 8, and I'm on the chart there now, the first row, 820 Taylor, that's a 2,000 feet that has been assessed at 14,340. Our rounded figure is 14,700, so clearly we're not debating that, the assessment on that premise. The basement premise at premise ID 26046, we come in at the same value. We're not suggesting that is inappropriate. The next larger premise at 21,807 feet, which has been assessed as a storage warehouse, we also come in at virtually the same number, so we're not suggesting that ARV should be amended. It's the next 3, and not coincidentally, those are the 3 premises that have been assessed by the department as the VSG space. So there's one large premise that the department's classified as VSG. We believe this, and you'll see in the photos, we believe that these premises should all be classified as storage warehouses, and that forms the basis of our request this morning. Having said that, recall that the question I'd had of Mr. Spacek of the largest premise that was most comparable in size to the premises, VSG premises in his materials, was at a rate that's actually very close to what we're suggesting. So we believe either way you look at it, it would be appropriate to amend those 3 premises to come in at the total ARV of roughly 501,000. So it's that VSG premise of 21,756. In this Quonset, and I'll show the board the photos of it, the 2,300 feet, and finally the building at the south side of Sparling of 7,000 feet. Those are the 3 premises that we have significantly different values. The most significant of which is that 21,756 square feet under premise ID 26048. So this moving on to page 5, the annual rental values for the areas that we're suggesting should be reviewed in detail. We're suggesting a net market rent of $6.50 a square foot for the office warehouse areas to the north of Sparling, a rent of $4 per square foot for the unheated Quonset area, the 2,000 or 2,300 square feet, I should say, and for the office warehouse area that's to the north of Sparling, rate of $7.50 per square foot. So on page 5, we've submitted a number of comparables, and these comparables specifically are because of our perspective on what the nature of these assets are. I have used industrial comparables rather than VSG comparables. As indicated there, the average is 622, the median is 603. The range is between $4.79 and $7 a foot for these properties. So with the occupancy costs, clearly no concerns there. So based upon the application now on page 6, chart that we've submitted there, again, the first 3 premises, we do not have any concerns with that. It's the last 3 premises. For the large premise area, 21,756, we're suggesting $6.50 a square foot. For that Quonset, 2,300 feet, we're suggesting $4. And for the improvements for the building to the north of Sparling, we're suggesting $7.50 a square foot, plus occupancy costs as we show there. And then the total ARB is $501,453, rounded to $501,420. So then if I, and this is where, Mr. Chairman, in terms of why we've come to the conclusions we have, if I could ask the board members and Mr. Spacek to now go to page 15. And these are the photographs of the various, not in the office building, but of the other premises on this site. So the first number of pages, this is 100 Harrow, which is the large office warehouse building. So the first page is, of course, the office area. The second page, top photo has the office area. And then when we go to the bottom of page 16, this is the start of the warehouse component. And this, it truly is essentially, it's most akin to a manufacturing slash storage warehouse. There's the overhead crane there, but it's that, of course, is not uncommon at all in the manufacturing spaces. And it certainly is in no way similar to a VSG space with, the pits and the HVAC systems and such. So bottom of page 16 and on page 17, it's further photographs of the space. The top of page 17 is taken from the mezzanine area, and then the bottom picture on 17 is the from the ground floor. Page 18 shows the locker rooms and various areas around that, the warehouse area. And again, page 19, a couple of more photos. Page 20, another couple of photos of those areas. And page 21, there's a wash bay there with the on that site. Then turning to page 22, this is the storage shed. Now, I believe it's unheated, but I noticed that the department has got heat on it. So I'm still making that assumption, but it certainly would not change my submission as far as the rental rate I'm suggesting should apply to that. This is a very low quality storage shed that we suggest would command a very low rate. So at the top photo is the exterior. The bottom photo on page 22 is the interior. And the reason I say I'm not entirely sure now anymore that it's heated, it looks like there is insulation in it, but as you can see, this is low quality stuff that Hydro built on here just for its own purposes and a very low rental rate, I suggest. Finally, we've got 100 Sparling. So this is the property to the south of Sparling, and page 23, you've got the 2 exterior photos showing the bay, grade level bay doors. Those doors are themselves the only sort of additional feature of that building that would in any way be comparable to the VSG, but the building itself, certainly you can have industrial spaces with multiple loading doors. Typically they're a mix of grade and dock level. In this case, they're all grade level for their purposes. But again, this property, I'd suggest very strongly, is much more akin to a storage warehouse. When one goes to page 24, that's the photo of the interior of that property, and it truly is. You've certainly got equipment in there for for working on vehicles is necessary, but it's essentially a storage building. There's no hoist, there's no pits, and it's just much more akin to a storage warehouse. So for all of those reasons, we're requesting that the board amend the assessment based on the adjustments to the three premise ID numbers that I've listed, and reduce the assessment accordingly. Thanks.
Thank you, Mr. Reimer. Mr. Spacek, questions of the applicant?
Thank you, Mr. Chair. I have no questions regarding Mr. Reimer's submission, but I would just like to confirm what I said at the start here. No matter, I would like to ask for this to be, I guess I am asking for a reduction from the value that was sent out, but that 615,600 is what I'm defending today. All my values and premises add up to that, so I'm going to ask for 615,600 be confirmed, just to confirm that.
Thank you. Stevens, questions?
No, I have no questions. Thank you.
Okay. Mr. McIntyre?
Just to confirm, what's in the roll is the 626.4?
Yes.
So you're making a recommendation to reduce to 615.6?
Yes.
Thank you. That's my only question.
Okay. I think that concludes everything. So we have heard all the scheduled, and this hearing is now adjourned.
Thank you, everyone.
Chairman. Thanks, Mr. Spacek.
Thank you,
Thank
everyone.
you. Thanks.
Thank you.
Thanks.